Much indeed for joining us.
Thank you.
Kathryn, are you paying much attention to the back and forth over stimulus right now?
Stimulus is what has taken the markets to current highs, both monetary and fiscal. So yes, I think in the absence of fundamental drivers of the U.S. economy, more is required from the market perspective. If more is required going forward, if the government is effectively able or should even manage the economy, that's another question. But from the depths of the pandemic, from March 23rd to today, we've seen more than a 55% ascent in the S&P 500, and that is not due to this massive hiring spree in the U.S. economy or some intense investment, either private or public. It is exclusively due to a $700 billion asset purchase program by the Federal Reserve and a quadrupling of the U.S. fiscal deficit. So the markets are de facto pricing in an additional round. Remember, this is an additional round. This is not the first round. This is an additional round of fiscal stimulus. If we don't get it, that would be an exceedingly nasty surprise. What I think could be a little bit of a downside surprise for the markets, however, is the rapidity of the next round of fiscal stimulus. I think it's very unlikely we get it in the next 13 days. And I think beyond that, in a lame duck session, we're very unlikely to as well. So we should expect it, I think, in the first quarter of next year.
Whoa, that might disappoint investors, I suppose, because so many people are out of work, companies are going bust. You'd have to wait until inauguration day, assuming, I guess, a Joe Biden win, to see fresh stimulus?
Yeah, I think if you get a blue wave, there's probably going to be a knee-jerk reaction to the downside in the markets. That, I think, will open up opportunities to add risk, and that's what I will be actively advising our clients to do because we have the full backstop of the Federal Reserve. And in addition to that, if we do get the market retracing because we don't get immediate fiscal stimulus, in addition to the multiple trillions of dollars we've already had injected into the system, I think it would be a fantastic opportunity to add risk, given that fiscal stimulus is, in my view, inevitably in the pipeline. But as I say, I think there's a very good chance we would have to wait until after inauguration.
You talked at the top about the massive asset purchases by the Fed. Of course, we've seen actions like that over the past decade and more since the global financial crisis. Are you concerned that the market is really running on money printing and artificial factors, that stocks are simply being valued on what the Fed will do next rather than fundamentals?
I think almost entirely. I think that the markets have been almost manipulated to a certain extent in that it doesn't matter what the earnings are as long as the numerator in that PE multiple continues to ascend. And the reason it's ascending is because the Federal Reserve has been buying in mass, not just treasuries, not just mortgage-backed securities, not just investment-grade bonds on the corporate front, but high yield as well. So if we get a retracement of 10 to 15% from here through year end, I do believe that the Fed is going to buy additional assets, and I would include in that fallen angels, which is one of my top picks from an investment strategy perspective going forward. Fallen angels, as your audience may or may not know, are those issuers that came upon issuance, were investment grade, but were suddenly subsequently downgraded. One of the three rating agencies downgraded from investment grade to below investment grade. Those are eligible for Federal Reserve purchase. The Fed is the biggest and the most important investor in the world, and it will continue to backstop the markets. So while I might fundamentally disagree with the interventionist policy of the Federal Reserve, one cannot miss out on the opportunities it continuously provides.
What about the big tech stocks? Are they going to keep rock and rolling?
If we get the blue wave, I think a lot of sectors, very big sectors, are vulnerable, and I think big tech is the first and foremost, simply because of antitrust regulation, which is, it's not unwarranted. They probably should be regulated, but under a blue wave scenario, we should expect that to be expedited. They will be taxed more and regulated more. I'll add to that big tech, big energy, big banks, and private healthcare companies. These are the sectors, in my view, most vulnerable, while the sectors that are more likely than not to outperform, and we've already seen this year to date, the markets are pricing in a Biden presidency, if not a blue wave. We've seen green energy absolutely soar. I mean, you see renewables going from 100 to 300% higher, depending on this specific security. So I'm actually recommending selling if you are fortunate enough to have been clairvoyant enough to buy those green energy stocks, to sell them, because I do think it'll be the old adage of buy the rumor, sell the fact.
That's interesting. Yeah, here in Toronto, the renewable energy stocks have gone stratospheric, and as you know, some accounts may be buying them just to be seen to be holding them rather than on their actual business prospects.
That's true too. Yeah, ESG is very important, and it's kind of, the fashionable thing now for companies to tout that they are socially conscious and keen on the environment. And I think you're right on that point. But I'll add to it that the prospect of a Democratic sweep, I think, ushers in the new Green Deal, which Biden and Harris have been unabashedly supportive of. We don't know exactly what their definition of the Green New Deal is. We know what AOC, Alexandria Ocasio-Cortez, and Bernie Sanders has been, but regardless, it's going to be trillions of dollars added toward the Democratic pet projects. So I think that that's also been fuel for the fire with regard to green energy at the expense, I'll note this, at the expense of big oil. Right? You've seen XLE and big oil companies absolutely decimated. And really, I think that's a value trap. I've got a lot of clients asking, should I dabble in? I think, well, if you don't mind sitting on losses for an extended period of time with the prospect of some big return later in a year or two, but I do think that we should be wary of big oil, especially, as I've mentioned, if in fact we do get that Democratic left-wing sweep in the United States.
Yeah, TD Bank said yesterday that by their numbers, North American oil and gas stocks were trading at a multiple barely above coal, the coal industry.
Wow.
We'll have to leave it there, Kathryn. Kathryn, thank you very much indeed for joining us.